Hi, folks. Welcome to the May 12th through 16th weekly market report. The headline was a 90-day United States-China tariff truce announced May 13th that cut U.S. duties on Chinese goods to 30% from 145%, while China trimmed its own to 10% from 125%. A move that ignited a broad rally across risk assets. Major indices in the United States responded in force. The NASDAQ composite was up 7%, the S&P 500 up 5%, the Dow Jones up a little more than 3%. Each closed back above its 200-day moving average, a level that many technicians view as a bullish confirmation. The deal establishes a 90-day window for deeper negotiations, immediately easing supply chain pressure and giving corporate margins room to breathe. The risk appetite spilled into cryptocurrencies. Ethereum jumped about 50% to roughly $2,700, while Bitcoin touched $106,000 during the week. Alternative coins, the altcoins, moved in tandem. Inflation moderated again. Headline CPI, Consumer Price Index, rose 0.2% month over month, and the core ran 2.8% year over year, even as the Conference Board's leading economic index fell 1%, hinting at slower growth ahead. But the leading economic index has been portending a recession for a long time now and hasn't been a very good leading economic index. Semiconductors stole the show. A rollback of the AI diffusion rule, plus multi-billion-dollar chip orders from Saudi Arabia, Doha, and Abu Dhabi sent the S&P 500 Semiconductors Index up to 44% since its April low. The growth forward PE, which sank to 19.8 on April 3rd, has already rebounded to 26 times. AMD underscored the optimism with a new $6 billion buyback authorization. Veteran strategist at Yardeni says the rally is running on Valuation Mojo since the April 8th bottom. The S&P 500 is up 19.6%, powered almost entirely by an expansion in the forward price-to-earnings ratio. So not earnings, the E part didn't go up. It was all by price, led by the 30% or so melt up in the Magnificent Seven. Yardeni now assigned the 75% probability to his roaring 2020 scenario and only a 25% to trouble, noting that a fresh meltdown scenario may need to be added back to the outlook. Broader tech kept the pace. Supermicro computer rose 44%. AMD rallied on new AI server deals, and several quantum computing names have sprinted triple digits month to date. In healthcare, United Healthcare actually advanced on some organizational changes, and Moderna reported encouraging phase 1 cancer vaccine data. Elsewhere, First Solar gained on the prospect of extended solar tax credits. Pfizer, which had been clocked the week before, faded choppily after a cautious Clover outlook by its CFO. And Hershey slipped as cocoa prices stayed elevated. The Federal Reserve left rates at 4.25% to 4.5%, repeating that future moves depend on incoming data. What's new? A trade truce, cooling inflation, a semiconductor revival, and Yardeni valuation-driven momentum combined to keep the market's bias higher, though leading indicators remind us that growth could be slowing and still bears watching. That's the route for May 12th through the 17th. If you found this useful, hit subscribe, and I'll see you next week with another market rundown. Bye.